Hi there, it's David here from Nestegg and welcome to the Meet the Managers series. I'm joined today with Alex Duffy. Alex Duffy is the Portfolio Manager for the Fidelity Global Emerging Markets Fund. And Alex, thank you very much for coming to the show.
Thanks very much.
So I think the conversation here, look, emerging markets across the global capacities, there's many different aspects and there's many different ways that investors can get involved into this. But can you give us a bit of an idea in terms of what emerging markets is and what that really means to Australian investors?
The unique opportunity that emerging markets present is really their size to all investors, not just Australian. You've got large, underpenetrated markets with multiple growth opportunities. Whether that's the fact that, you know, in places like Indonesia, only 25% of the population have got a bank account. Whether it's the fact that, you know, penetration of refrigerators in places like China will be one refrigerator to every 7 inhabitants. So whatever the case might be, these are large markets starting from low levels of penetration across pretty much every line of consumer product, and that growth opportunity is very unique. The second aspect of emerging markets, which I think is most interesting, particularly from an Australian perspective, is just the diversification that it offers. So emerging markets, when you look at countries, as I said, the Asian countries, so China, Taiwan, South Korea and India, for the most part, technology-intensive industries, local consumer-facing industries, less commodity exposure than perhaps we might have from an Australian perspective. And so just a different driver of economic growth and a different source of return. And actually, returns that are not correlated, so drivers that are not as correlated with the returns that you get here in Australian equities. And there's value in having greater breadth and essentially not putting all your eggs in one basket, right? Yeah. You've got different sources of ways in which of trying to meet your end retirement needs. And I think emerging markets offer that in multiple different ways as a consequence of the sectors and countries and geographies that you can invest in.
And it says a lot to access. So I think diversification is one thing, but actually being able to access that into potentially even one trade is actually the core component part as well.
Absolutely. So a global emerging markets fund, what that's able to offer you is that exposure in a single product, essentially, or a single fund to a whole plethora of different countries and sectors. So, you know, in my portfolio, we have exposure from Brazil and Mexico all the way across to China and South Korea and a couple of places in between. You know, exposure to consumer sectors, exposure to financial sectors, exposure to leading industrial companies that are investing in innovation and technology, and you know, that breadth of opportunity is unique, and that's what the asset class is really able to offer, maybe in more of a, you know, greater sense than perhaps Australian equities as a standalone would provide. We launched the Active Etf in October of last year, which is fantastic in its simplicity, actually. So it provides investors the ability to access in a single trade on the ASX the actively managed Fidelity Global Emerging Markets Fund. You get instantaneous pricing of the strategy and you get instantaneous same-day liquidity. And so this is the first actively managed emerging market ETF available on the ASX, so it's innovative in that respect, but it also just offers the ability for clients to access the strategy in a very clean, simple, instantaneous manner without any of the aggravation of onboarding and client account opening that can go with the unit trust structure. So it's exactly the same strategy, exactly the same investment philosophy, but just in a much simpler, more digestible, easier to access form for our clients. And so we really think that that's, you know, a unique opportunity again of how to invest in emerging markets as an asset class.
Are you on the ground at this? Do you go out there and do you find and scope out, have a team that can give you an idea around what these companies are doing, where you find them, how you source them, and essentially how they become part of the family of Fidelity?
Absolutely. So I think one of the key issues with emerging markets as an asset class is that you are operating in what are often relatively newer, nascent industry structures with newer companies. And so it's critically important to get to know those businesses well, to understand the management teams that you're entrusting your capital to and investing alongside, and essentially building up a level of trust and conviction in the management teams of the businesses in which we operate. And so leveraging Fidelity's global industry structure is a critical component in terms of achieving that, be it through our analysts covering Latin American and EMEA companies from London, be it from our regional offices in Shanghai, Hong Kong, Singapore and Mumbai. It is critical that we spend a lot of time on the ground getting to know these companies in great detail. We do that through the analyst team operating out of those offices that I've just mentioned, 43 analysts in total, in addition to the portfolio management team of which I'm a part, that is really aimed at enhancing as far as possible our understanding of the companies that we're invested in, gaining great insights into how they allocate capital, the types of businesses and the opportunity set that they're presented with, and then looking to own those in conviction within the emerging market portfolio that I manage.
So it's not a small team, is it? You've got quite a few people in the background there just sort of working across doing all those things. But if we bring it back home to the Aussie investors, and there's I always say this thing, there's 2% of investments in Australia for us over here, but there's the 98% of the world which is out there. And there's also the argument, you could say, where there's so much on the menu, and when you have too much on your menu, it's really hard to find out what you really want. So diversification for Aussie investors is becoming evidently more popular, as we can all say, we can all agree on. But when you speak about all these other companies or different industries that you're looking into, what really sort of, in this particular fund, tickles your fancy? What really gives you a bit of an idea in terms of where things are really ticking all those boxes for you?
There are a few opportunities that really present themselves as a standout from a thematic perspective when it comes to global emerging markets. But the underlying principal driver is that element that I mentioned earlier on. It's the ability to find companies that have got unique business propositions in these lowly penetrated marketplaces, and then offer a growth opportunity over the long term through which to create value for their end shareholders. There's a few key areas where I see some of those real opportunities. The financial services sector would be one, where you have a large number or a number of large dominant banking franchises in single countries across emerging markets. So, take an example. The stock that we own in the portfolio called Bank Central Asia, or BCA. BCA is the largest privately managed bank in Indonesia. They have a client base, to give you a sense, they have a client base of 42 million odd clients, of whom only 8 million have a lending product with the bank. So there's a huge opportunity for BCA to take those deposits that those 42 million clients entrust to them and cross-sell basic lending products, be it credit cards, maybe auto loans, in the longer term maybe home loans or working capital for small businesses, and to continue to grow with the development and the increase in banking penetration of a country like Indonesia. Now, Indonesia has economic and political volatility that is sporadic and can cause fluctuations across the cycle, but over time, the ability of a bank like BCA to continue to execute on that opportunity and that cross-sell of such a large domestic market really generates lots of value for shareholders who are prepared to take a longer-term investment time horizon, as we are with the Fidelity Global Emerging Markets Fund. And there are multiple instances of that, whether it's HDFC Bank in India, which is a similar story, a large a bank targeting retail-facing customers, rural banking within India, hugely underpenetrated marketplaces, and an ability to consistently grow their companies at 18 to 20% a year without taking undue levels of risk. So you're getting single country exposure, you're playing thematics in terms of bankerization and underpenetrated marketplaces. You're doing that with management teams that we've got to know over the last decade and even longer in the case in many instances, and therefore people we can trust in these marketplaces. And so it's bringing that to bear at a single company level to really create value for the shareholders.
Yeah, for sure. Look, you're very passionate about not just the particular fund, but the actual companies that you go and visit.
Absolutely.
So does this make an impact where, and this goes back to the way it's actively managed. So being actively managed, you obviously have a lot of work cut out for yourself where you have to go out and, like we've mentioned before, visit these companies, go and see them and understand them. But can you just repeat a little bit about the actual credibility you've had with these companies? It seems like you've known them for a long time.
As a long-term owner of companies within emerging markets, which is what I am as the manager of the portfolio, it's critical to understand that partnership that we're a part of with with the management team. And so we have a very well-resourced investment team. I've alluded to the scale of that infrastructure already. You know, those individuals are industry experts. They spend a lot of their time with the companies in which we're shareholders, but also meeting competitors and customers and suppliers, piecing together the mosaic that helps us to identify what it is that's unique about a particular business, that enables it to consistently, you know, generate attractive levels of profitability that remunerate shareholders over the long term. And then, you know, as the investor and as the shareholder of those companies, it's important that we really understand that management team's ownership culture, and we're able to partner with those businesses for the long term in order to understand how they generate value, how they're able to consistently and sustainably generate value over the long term, and therefore hold them in high conviction positions within the portfolio. There are multiple factors that influence emerging markets, be it regulatory, political, exchange rate volatility. And so, you know, whilst you're dealing with all of those exogenous risk factors, it's important that you can entrust capital to people on the ground in good businesses, and you're not taking undue risks as a consequence of that, because there's enough other risk factors that make life complicated enough as it is.
Yeah, for sure. Bit of a personal question, but could you give me a bit of an insight towards your own philosophy and how that, just in your own world of investing personally, and what really you can take and translate and broadcast onto the bigger business? I think it's important to understand a bit more about your values as an investor yourself. I can imagine you're not new to the game, but also quite experienced in terms of getting things right and getting things wrong. But where have you sort of come from, and where are you looking to lead to as well?
The starting point for me when I'm looking at any particular investment opportunity is to understand the governance structures of the companies that we're invested in. So I'm very prudent when it comes to allocating capital, to only investing in companies where we've got an alignment from a managerial and shareholder perspective, where we've got robust balance sheets that help protect against downside risk if we're wrong, so mitigate downside risk and mitigate the probability for permanent losses of capital. And then I like to focus in on understanding companies in great detail, understand how they generate levels of excess profits and cash flow, what it is that about a business that enables it to sustainably generate, you know, attractive levels of profitability that can't be competed away. And I like to, you know, and what I think is really important is when you find those good stock ideas, you have to own them in size so that they can make a meaningful contribution to the portfolio. So, you know, I manage a relatively concentrated portfolio, 35 companies roughly, where we you know, have high conviction, and we've got that alignment of interest with the management team, and we trust the management team of the company that we're invested alongside. And then finally, I take a long-term view. I'm not somebody who really believes that, you know, you can consistently generate excess returns over the very short term, except in maybe extreme exceptional circumstances. And so I like to look at businesses over a 3, 5, 10-year investment time horizon and seek to own those good companies where we're aligned with management teams who can allocate capital well, consistently generate returns on invested capital that create future cash flow for shareholders, and hold them for as long as I possibly can. And so, you know, simplistically, that's where I come at it from as an investor. And I do think that, you know, having that level of trust in a company and also an organisation in which you're partnered with is absolutely critical. You know, as is the rule of law in the countries in which we're invested in, which sounds very simplistic, but in emerging markets there are elements where, you know, rule of law may be less enforceable in some places than it is elsewhere. And so it's important to understand that backdrop of how you're investing and what that actually means for long-term returns as an owner. I
actually think it's very admirable, the fact that you go into an investment philosophy without having to look at the short term and just the short term. Obviously investments are forever changing, and it's very hard to see into a crystal ball of what's going to go in the future. But to take that approach and actually, you know, really actually do your research, find out what these good quality companies are going to be hopefully doing in the future, it must be quite tricky at the same time, but also quite rewarding to understand that you're managing this in a very respectable way, I'd say. I've always felt that there's a really unique opportunity actually to put together a high conviction portfolio of good quality businesses that execute on that reinvestment opportunity, that growth opportunity that emerging markets provides. Too often, individuals trying to gain access to that sort of exposure via, you know, an index type product embrace risk factors they would never be comfortable with: governance, balance sheet risk, political risk, FX risk, whatever it might be. And so, you know, I have
clearly taken the view that there's a long-term opportunity in this asset class, provided you allocate capital well to companies that treat it with respect. And you have to take, as I said, take that longer-term view to enable the portfolio to benefit from the growth opportunity and actually the power of compounding over the very long term. And that's, that's how we go about seeking to maximize returns for our clients, but also to do so in a very consistent, risk-adjusted fashion. And I've observed, and I'm all too aware of the fact that actually it's the drawdowns, it's the losses of capital in difficult economic environments that create the biggest challenges for our investors. And so it's important to offer a client experience which meets the end objectives, but does so in a very measured, risk-adjusted fashion. And the way that the portfolio is built from the bottom up with the stocks that we invest in, but then how those stocks fit together in terms of ensuring that we don't have overly concentrated and correlated positions, but we actually have diversification at a fund level, helps to mitigate some of the correlation risk that can occur to manage the drawdown and the downside risk that gets presented from the asset class. And so I think that is really what makes this strategy unique versus other investment opportunities that might be out there.
Yeah, absolutely. It's the one to watch. Alex, thank you very much for coming in. I think that was a really good insight in terms of, and for me as well, just to get a bit of an impact around the global emerging markets factor, but the economics behind it, and also the real idea of how you really take this on your own approach and your own philosophy, which is very important.
Great, thanks for your time.
And thank you very much for tuning into this episode. If you'd like to learn more about Alex Duffy or across Fidelity, you can check out the links below. You can also look at Facebook, Google or LinkedIn to follow nestegg.com.au, and you can also get in touch with me at editor@nestegg.com.au. Thank you for tuning into the episode and see you in the next one.